Welcome you all to Project Target. This is an online seminar series for all three subjects conducted in both mediums, Sinhala and English, happening for the second consecutive year. We had planned to do this physically, but due to various circumstances, we have decided to have it online. Today, we are starting off the seminar series with the English medium accounting seminar. It will be done by Mr. Gayantha Jayasuriya, who is a lecturer at University of Sri Jayawardhanapura. But first, we have a small video message by our main sponsor, AAT.
I'm Akib Fazli. I studied in Zaira College, Colombo, Maradana. I finished my O-levels on 2018, and right after I finished my O-levels, I started with AAT. Whilst I'm doing A-levels, I was doing AAT, and I didn't think that AAT can make a big effect while I started. But doing that, I got a message like this makes my life easy. Like doing A-levels in commerce stream, and similarly doing AAT makes my studies easier, and I got a professional qualification with it. I was a senior prefect on 2021, and I also did karate for 6 years in my school. Extracurriculars was also there, but doing AAT made me excel in studies in commerce field. And once I finished my school, I had a professional qualification with me, which is a value addition in my life career, and it helped me to get a good job too. And currently I'm in audit firm. I think doing AAT will make your life a plus added to your career.
I'm Vinuri Ranasinghe from Sima Bandanayak Vidyalaya. I started AATs right after doing O-levels, and it was a great help for my advanced level examinations as well. So I recommend AAT to all my dear sisters and brothers. Thank you.
Hi, my name is Vishal Matish Amarasinghe. I'm a student of Royal College, Colombo. So I joined AAT soon after my O-levels, and it has been a great help for me when I was facing my A-levels. I recommend all of you all to join AAT, since it will be a great help in going forward with your education. Thank you.
And now we have a representative from AAT to deliver a small message to you.
Good evening. Am I audible to you?
Yes.
Okay. First of all, thank you for giving this opportunity to give you an awareness about AT professional qualification to get your future career successfully. AT Sri Lanka has been in this education industry for over 33 years and have produced 4,100 students, 36,000 active students a year, and 15,000 new students approximately every year select AAT as their first professional qualification. Why do you have to select AAT as your first professional qualification? What are the benefits that you'll be able to get? Over 50% every year out of the 100 top resource students in the commerce stream in A-level exams are AAT qualified students. It's because you will be able to get more knowledge about how to write correct answers for your questions, and also time management during the exams. And this is the only professional qualification that you can complete while schooling. And by the time you finish your A levels, you have a professional qualification in your hand. And after your A levels, other than that, after completing AAT, you will be able to get many exemptions for other professional qualifications, such as you will get 8 subject exemptions for CA, 4 subject exemptions for CIMA, 8 subject exemptions for CMA, and for many other professional institutes. Through AAT Sri Lanka Job Bank, we guaranteed that we will get your job to complete your 1 year of practical training to apply to AAT membership. Once you get the membership of AAT, you are eligible to apply direct membership at internationally recognized accounting bodies such as IPA Australia and IFA UK. When it comes to the AAT qualification, there are 3 stages that you have to complete, and you can do AAT qualification in any language, English, Sinhala, Tamil, as your preferable language. There are 2 intakes every year, and there are 2 exams in every year for your convenience. And you can join AAT through registered classes, and also you can do self-studies as well. For more details, you can connect with AAT website, FB, Insta, and Telegram as well. I invite every one of you to start your future with AAT and invest your time in a place where will fix your future. Thank you.
On behalf of RAC UCFMF, I would like to thank AAT for sponsoring this project. Before we start our session, I would like to let you guys know about something that we're doing along with this project. As a part of our project, we have also prepared a model paper book which you can purchase for just 700 rupees. This book contains 6 model papers for accounting, economics, and business studies, along with the answer scripts, which have been prepared by teachers in leading schools. This book is available in both mediums. All funds raised through this project target is directed towards Project Siswara. Project Siswara is a community service project in which a rural underprivileged school will be chosen and their necessities will be fulfilled. So if you can, please contribute towards this worthy cause, and the link to pre-order this book is in the chat box. So moving on, Mr. Gayantha Jayasuriya will be conducting today's seminar. To give you a small introduction about him, Mr. Gayantha is a lecturer in the Department of Accounting at University of Sri Jayawardhanapura. He has a BSc in Accounting from University of Sri Jayawardhanapura with a first class and is currently reading for the MBA in University of Colombo. He is an Associate Management Accountant, CIMA past finalist and AAT past finalist. He is also a finalist of ICASL and ACCA, while also being a diploma holder in computerized accounting. Hope you will all get the best use of his knowledge. Over to you, sir.
Thank you very much, Sandersi, for your kind introduction. I hope I'm audible enough. Can you please confirm whether I'm audible enough?
Yes, sir, you're audible.
Yes, okay, thank you. So before starting the session, so I really like the initiative done by the Rotary Club of Faculty of Management Studies, Management and Finance in University of Colombo. And it reminds me my university time, like 5-6 years back, where even I was a Rotary as well. So first of all, before starting the session, let me wish you all the very best for your future projects. And also thank you AAT for sponsoring for this course. Okay, so let's start the session. First, let me share my screen. Okay, can you confirm whether my screen is visible to you?
Yes, sir, it's visible.
Yes.
Okay, right, thank you. So if you are discussing about the today's outline, our main focus is on the manufacturing cost statements, right? And also we are going to discuss some theoretical aspects of LKS2 inventory. So this manufacturing cost statement, sometimes you are familiar with the term, more familiar with the term manufacturing accounts, right? Yes, that is also correct, but even in your syllabus, sometimes they may say manufacturing account. That's all fine. But please keep in your mind, account is something which is having like a debit side and credit side, debits and credits, right? Uh, Actually, like 10, 15 years back, we prepared manufacturing accounts, right, in account format. But now we are not preparing an account. Instead, what we are doing is we are preparing a statement, right, like income statement, statement of financial position. Likewise, this is also a particular statement. Therefore, when we are terming this, right, it's good if you can say it as manufacturing cost statement, manufacturing cost statement. So, why we are preparing this manufacturing cost statement? So before that, this is a lesson which is there in the grade 12 syllabus. So if there's any grade 12 student, don't worry. This is a part which will be there in your third term, right? And grade 13 students, anyway, I hope you all have covered this area, but take this opportunity to recap what we have learned. And when it comes to the examination perspective, we do not find a separate question from manufacturing cost statements, but this area can be linked to any other topics. As an example, like 1 year it was there, like I don't remember, 2014 if I'm not mistaken, manufacturing cost statement plus partnerships, right? And manufacturing cost statement plus incomplete records, like that. So this area can be merged with other areas. Therefore, in order to successfully handle those questions, you need to have a thorough understanding and very clear understanding on this. And also, if we go to first paper, definitely direct questions will be there specifically from manufacturing cost statements. Right. Sorry. So manufacturing cost statement. So what is the purpose of preparing a manufacturing cost statement? Simply as the name says, we are preparing this in order to find out the manufacturing cost of a business. So by looking at that point, you can understand that manufacturing cost statement is not something applicable for all business entities, right? This is applicable only for the manufacturing organizations. Right? Because there are some merchandising organizations where you are mostly dealing with in your dealing in the sense in your examination and your syllabus, they are always talking about, in most of the cases, the merchandising businesses. So merchandising business means they are buying goods from one party and they are selling those goods to another party, buying and selling part. But manufacturing cost statements are prepared by the entities, those who are engaged in the production, entities, those who are engaged in the manufacturing aspect. Therefore, main purpose of preparing this manufacturing cost statement is to prepare, is to identify the manufacturing cost of a business. In order to identify manufacturing cost, we are preparing the manufacturing cost statement. Right. So this statement include all the cost incurred in the production process. So production process means from the point, right, from the point where we are inputting, right, from the point where we are inputting raw materials and they are converted to finished goods, finished goods. So total cost that we are incurring in this process. So this is the manufacturing process. This is the manufacturing process. So all the costs that we are incurring within this process, right, which means we are converting raw materials into finished goods. The cost is known as the manufacturing cost, right? As an example, let's say, if you are doing a garment manufacturing business, right, a garment factory, from the point where we are bringing those raw clothes, raw materials, right, to our business premises, and until they converted into finished garment items, right? Shirts, trousers, skirts, blouses, whatever it is, up to the point where we are converting those raw clothes into finished goods, considered as the manufacturing process. So the cost involved in this process is known as the manufacturing cost. The cost involved in the total manufacturing process is known as the manufacturing cost. Right. So if we broadly discussing about the reasons for preparing manufacturing cost statements, so it is to control the production cost. Exactly, yes. Right. So we are preparing manufacturing cost statements in order to control the production cost. So manufacturing cost, or else we can say this as production cost. Production cost, similar terms, synonyms. So when we prepare manufacturing cost statement, we can easily see, okay, where we are incurring our manufacturing cost, right? Where our major cost items are lying in. So by focusing on those areas and those aspects, we can reduce, the cost to a great extent. We can compare the manufacturing or production cost over the time periods, and then we can see, okay, in this particular area, the cost is high, then we can take necessary steps to control that cost, Therefore, one major reason of preparing manufacturing cost statement is to control the production cost. Then to determine a price for the product. So usually we are pricing products in this way. First of all, we need to calculate the cost of a product. So for the cost, we are adding a profit margin. For this cost, we are adding a profit margin. Then we decide the selling price. So in order to decide the profit margin, in order to decide the selling price, we need a profit margin. In order to decide the profit margin, first of all, we need the cost of the product. Right? As an example, if the cost is 100, we are adding a profit of 20 and we say selling price is 120. Therefore, in order to decide the selling price, definitely, first of all, we need to know the cost. We need the cost. But don't think that always we need cost in order to determine selling price, right? So we say this is like cost plus pricing. You will be learning those aspects when you are go for higher studies or in your professional courses in future. You may learn this, right? There are some cases where we do not need cost, right? Straight away we are taking the price which is there in the market. So in economics, you are learning the perfect competitive market. So their selling price is already determined within the market. No need to separately think about the cost, because selling price is anyway there in the market. But in most of the cases, most of the organizations, what they do is they first calculate the cost and they are adding a profit margin on top of that. Then they decide the selling price. Third one, to classify the total cost of a unit manufactured. So we need to know the breakdown of the cost, right? We need to know the breakdown. If someone says manufacturing cost is like 1,000 rupees per unit, we need to know the breakdown, right? In which areas we have incurred the cost. So in order to know the breakdown, we can easily refer to the manufacturing cost statements. So second point, so fourth point is the same thing, right? First, in third point, they focus on the unit, and here the total cost. Anyway, the classification of cost we can see through the manufacturing cost statements. Then to calculate the total production cost under each category. So we are categorizing production cost. So we cannot see the broad picture always. We need to narrow it down. So by narrowing it down, we are having separate categories. So in each category, we need to know about the cost of each category. So we can do that through manufacturing cost statements. Right. So if you are having any doubt, you can raise it, right? You can unmute yourself and you can raise the question, or else you can put your questions to the chat box as well, right? Either method. Right. So before we are moving towards the preparation of manufacturing cost statements, we need to know about the classification of cost classification. This is a very important area. This part sometimes you'll be learning again in your management accounting, right? When you are starting management accounting, sometimes again you are going to discuss this part. But in here, it's better to have a thorough understanding regarding the classification of manufacturing cost. So when we are classifying manufacturing cost, basically we are classifying it into two. One is the prime cost, other one is the production overhead cost. Prime cost and production overhead cost. So what do you mean by prime cost? Right? So if we draw like a flow chart, let's say manufacturing cost broadly into two as prime cost and production overhead cost. Production overhead cost. Further, we can classify it, but don't worry. For the time being, let's start the discussion in this way. So prime cost means, right? Prime cost means, in other words, we say it as direct cost. Prime cost, or else we say direct cost. Right. So prime cost means the cost items which are embedded within the final output. The cost which are embedded within the output, within the finished good. Which means if we take this, if we take a particular finished product output, we can see the prime cost elements there. We can see the elements, right? We'll see how it is. So the prime cost consists of all the direct expenses, as I said, incurred in manufacturing the product. The main feature of prime cost is they can be traced as prime cost to the single unit. Right? We can easily trace the cost to the units, which means the cost can be easily related with the single units, individual units. We can relate the cost to individual units, or we say tracing. We can trace the cost to individual units. Right? That is known as prime cost. Or else you can say the cost items which are embedded within the product. Right? As an example, let's say in a garment manufacturing, in a garment factory, right? Garment manufacturing organization, their end product is the garment items. Let's say a shirt. So if we take a shirt, there should be definite elements, right? There should be definite elements, definite items to do this, in order to take this final output. As an example, the raw clothes, right? The raw clothes that they are using for the production. You may say sometimes fabrics, right? Fabrics. So it consists with a larger part of the final output, right? The fabrics. Those things are known as the direct materials, which means the material item. Material means something which is tangible, where you can see that, where you can touch it, where you can feel it. Materials, right? Materials, right? Material means the tangible items that are there within the product, and it becomes a part of the product. Direct materials are becoming a part of the product, right? So this is the major material element that we are using for the production. This is the major material item that we are using for the production. That's why we say direct material. We take another example. If we say, let's say, furniture manufacturing company, they are having, let's say, furniture items, the tables, the chairs, and the sofas, whatever it is. So what is the main item, main material item, main material element in their product? That is the timber. That's the timber. So that becomes their direct material. If you take bakery items, if it, let's say, a cake, final output is the cake. But what are the essential material items? Flour, sugar, butter, right? Eggs. Those are direct materials. Right? The definite elements, right? Definite tangible items that are there within the product Right? Within the final output is known as direct materials. So the cost that we are incurring, right? Cost that we are incurring for those items, those material items, we termed it as the direct material cost. Direct material cost. Right. Hope it is clear. Direct material cost. Right. Then direct labor. So here we are focusing about a labor part, labor cost. So labor means simply the physical and mental efforts of a person. Physical and mental efforts of a person is known as the labor. The payment that we are made for their physical and mental efforts is known as the labor cost. Labor cost. So direct labor cost means, right? Direct labor cost means the cost or the wages that we are paying for the parties, those who are directly, directly involved in the production process. Those who are directly doing the production. Therefore, direct labor cost means the wages or salaries that we are paying for the production workers. Production workers. When it comes to the garment factory, the direct labor cost means the salaries that we are paying for Juki machine operators, right? The machine operators, because they are the ones, those who are doing the production. When it comes to a bakery, the direct labor cost means the persons, the salaries that you are paying for the persons, those who are doing those bakery items, those who are producing those bakery items, right? Bakers. When it comes to a furniture manufacturing company, the salaries that we are paying for the carpenters, that's the direct labor cost. So direct labor cost means, please keep in your mind, this is only the labor cost that we are incurring, for the production workers. Right. So those two cost items are very much clear. Right? Direct material means if it is a material, it should be tangible element, tangible item. It becomes a direct cost. Why? Since it is there within the product, and without having those direct materials, we cannot do the production. It's an essential element of the item, finished output. Direct labor means, labor cost means the salaries or wages that you are paying for the physical and mental efforts of the workers. But direct labor cost means such wages and salaries that you are paying for the production workers. Right. So those two things are very much clear. But other than that, we are having some other direct cost. What do you mean by this other direct cost? Which means there are some cost items within the finished product, finished good, but you cannot see them. Right? We cannot see them. Why? Direct, like if we say materials, we can see that. But if we say other direct cost, no, we cannot say. It is not in the material form. And also it is not in the labor form. Right? We do not consider about the physical and mental efforts of anyone. So what is that? You may think that it should be anyway a material or a labor item. But here, direct other cost or other direct cost means there are some costs where we need to pay in order to carry out this production process. As an example, if we say the royalty payments. What do you mean by these royalty payments? Let's say you are the author, right? You are the author of a book. You are writing a book, so you become the author. But you don't have facilities to publish this book. You don't have printers. You don't know the technology. Therefore, what you do after you are writing the book, you may provide this to a book publisher. We say Sarasavi or Samudra, Gunasena, whatever it is, right? You are giving this book to publish. That's why they say Sarasavi publication, like that. But there's a separate author for that. So what is the normal process happening there? If let's say now we are the Saraswati bookshop, if you are purchasing a book from the author, right? In most of the cases, we are agreeing to pay some amount. Let's say the cost of the price of the book is 1,500. We say from each and every book that we are selling, we will be giving you 30%. We'll be giving you 30%. Right? Likewise, we need to pay from each and every book that we are selling. So from Saraswati Bookshop perspective, which means the company's perspective, this cost, right? This cost, definitely we need to pay in order to do the production and the selling part. It is known as the royalties. They are known as royalties. Right? So it is not in material form, it is not in a labor, right? You may say we are paying this for the author, therefore it's a labor cost. No, right? Because author is doing only the writing part, only the writing part. The production means the printing process of the book, printing process. So here the direct labor cost means the salaries that we are paying for the machine operators of these printing machines, not the author. So the amount that we are paying from each and every book that we are selling to the author is known as the royalty fee. So definitely we need to pay this. If not, we cannot do the production. Right. Another example, let's say there are fashion designers, right? There are fashion designers. So what they do is they are designing the clothes or the fashion items, and then they are selling those the patterns and all the designs and patterns to those fashion stores, right? It may be to Odell, it may be to Pool Planner, right? It may be to Candy, whatever it is. They are selling it, selling the patterns and designs. So the garment items or the clothing items that you see in those outlets, in those fashion stores, are not their own designs. They are not their own designs. They are coming out through the efforts of fashion designers. So for the design, sometimes we need to pay an amount. Again, it can be a the variable royalty payments where we may agree, okay, from each and every garment that we are selling from your design, we will be paying this much. Right? Well, sometimes they may purchase it as a fixed amount, right? Let's say I'll purchase your design for 300,000 or 500,000. Right? So those things comes under other direct cost, right? The royalties, the designing and the patterns that we are having in our product. Likewise, those items are considered as other direct cost, right? So how you define other direct, how you define prime cost? Where the cost you can easily trace with the single unit or one individual unit. You can easily trace, you can see it varies with the production, right? You can easily trace it, you can easily identify it with relation to the product, right? Anything to be clarified? Any doubts? Right. So here the definitions are given: the direct material cost, the cost of raw materials used for the manufacturing process. Direct labor means this is the cost of laborers who are directly involved in the manufacturing process. Direct other means these are the expenses incurred which are directly related to the manufacturing process. So I have given you few examples as well. Keep those examples in your mind. It will be easy for you to easily understand. Okay. Then we are done with one part, right? We are done with one part. As I said, manufacturing cost or production cost are having major two categories. One is the direct cost or the prime cost. We are done with that. It comprises with direct material, direct labor, and direct other cost. Then on the other hand, we are having indirect cost. Indirect cost. So indirect cost means any cost item which does not fall under prime cost. Any cost item which does not fall under prime cost is known as overhead cost or indirect cost. But please keep in your mind, we are not considering all indirect cost or all overhead cost in manufacturing cost statements, right? Because if you say, right, if you say uh, overhead cost, OH refers to overhead cost. Again, this can be divided into two as production overheads and non-production overheads. Production overheads and non-production overheads. So production overheads means the prime cost, but within, within the factory. The cost that we are incurring within the factory, but not the prime cost. Not the prime cost. Right? Non-production overheads means the indirect cost that we are incurring outside the factory. Outside the factory. As an example, your office rent, office telephone bills, office water bills, office electricity bills, distribution vehicle charges, bank loan interest. Those costs are nothing to do with the production part. That's why we say non-production. They are also indirect. Indirect means you cannot easily trace that cost with the output. You cannot see a direct relationship between that cost and the output. But they are supporting, right? They are supporting for the production. But we cannot see a direct relationship. But if you say direct material, direct labor, there's a clear-cut relationship. But in here, you don't find a relationship, but they will support. Right? That's how you define overheads. But in manufacturing cost statements, we are focusing only about the production overheads, which means the cost that we are incurring within the factory. So non-production overheads, where you are going to record those non-production overheads. Yes, someone please tell me. Non-production overheads, where you are going to record them. Non-production overheads. No what? Even you can use the chat box. Put it in the chat box. Non-production overheads, where you are going to record. You may say administration expenses, selling and distribution expenses, finance and other costs. Likewise, you are specifically having those costs in income statement. So in your income statement, you can see under other expenses, which means after like other income, you may record those items. So non-production overheads are recording in the income statement, where production overheads are recording in the manufacturing cost statement. Right. So another point that you need to remember here, another term for the non-production overheads. Yes, you can say non-production overhead, but in your examination, sometimes your examiner may use some other terms, similar terms, like period cost. Period cost. Right. So please keep in your mind, another term for non-production overheads is period cost. Period cost. Because those costs we are incurring for the period. If we say rent for a particular time period, electricity for a particular time period, they are not product cost or production cost, right? Production cost means prime cost plus production overheads. Non-production overheads are referred to as the period cost. Period cost. Right. So here it should be actually the production overhead cost, right? Production overhead cost. These are the expenses which are not incurred in the manufacturing process. Overhead cost cannot be traced as overhead cost per unit. We cannot easily trace it with the product. So again, here you can classify this as indirect material, indirect labor, indirect other, but there's no any use of doing such calculation, right? Because overhead cost you can do it as you wish. There's no definite classification, right? No definite classification for overhead, production overhead calculation, right? For classification, there's no any proper order. So mainly you find indirect labor, but within the factory. So if you take a factory, production workers are there, production laborers are there, where they are engaged in the production process. But other than those production workers, we are having some other workers, those who are working, but they are not doing the production. They are not engaged in the production process. As an example, the supervisors, factory managers, factory cleaning staff. They are also working within the factory. Therefore, it comes under production cost. But always keep in your mind, in order to become a production cost, you need to incur that cost within the factory. But you have to incur that cost within the factory. So production worker salary goes to the direct cost. But if you say supervisor salary, the salaries of cleaning staff, factory manager salary, those items are labor, right? Labor, physical and mental efforts of them. But they are not involved in production. Therefore, those items we consider as indirect labor, and they goes to production overheads. Then you may find some indirect materials as well. Sometimes those nails, sandpapers, right? Then the needles that you are using in garment manufacturing. Right? So those things, right? Those things, they are considered as indirect material. They are not the major material that we are using for the production. They are supporting. They are supporting for the material items. They are supporting for the production process, right? Then some other indirect expenses like rent and rates, the rent of the factory, fuel cost of the machines, right? The packaging cost, those costs, right? So yes, you can again classify as indirect material, indirect labor, and indirect other expenses, but there's no any use of that because we are not going to classify that in that detail. If you can identify it as a production overhead, then that's fine. Don't worry about this classification because this won't be tested. But classification of prime cost or classification of the direct cost is a critical area. Right. So if we recall what we have learned up to now, right? What we have learned up to now. So we are discussing about the cost classification, how to classify the cost. Cost can be mainly classified as prime cost and overhead cost. Prime cost means the cost where we can directly trace with the product. We say it as direct cost. It comes under production cost. If we say overheads, again, there are two types, production overheads and non-production overheads. When we prepare manufacturing cost statements, we are focusing only the production overheads. We are ignoring non-production overheads from the manufacturing cost statement, but we transfer them to income statement as administration cost, selling and distribution cost, and finance cost. So this cost classification is very much important. Definitely in your examination, question will be raised on this area. And we see that most of the students, they are failing to successfully attempt on those questions because sometimes they are having some partial knowledge. They do not have a crystal clear understanding. that in your, because examiner is testing a very tiny area, right, where you need to think a bit. Students are failed to, most of the students are failed to grab the requirement of the examiner. That's the pathetic situation. Therefore, have a very clear understanding about those elements. Right. So before we are moving towards the next part, anything to be clarified on the cost classification? Seems like no. Okay. Right. Then let's discuss about some inventories that we can see in a manufacturing firm, or we say stocks or inventories where we can see in the manufacturing firm. So as I said, we need raw materials, right? So we are doing a production. In order to do the production, we need raw materials, because raw materials become the input for the process, right? It becomes the input. Therefore, raw materials is a critical part. Then at the end, right? So we are having raw materials. After the process, we are having finished goods. So again, finished good become a stock. Here, as an example, fabrics or raw clothes, raw materials, finished goods, the garment items, the shirts, trousers, skirts, blouse, etc. So in one hand, in our warehouse, we are having raw materials as fabrics. On the other hand, in another warehouse, we do have our finished products, inventories, stocks. And in between those two, we do find something which is known as work in progress. Work in progress. We say WIP. What do you mean by this? It means, so as you all know, we are doing accounting for a particular time period, for a specific time period. Let's say for 1 year, 6 months, quarter, monthly, or even weekly or daily. Usually we are doing it annually. No? So let's say at the end of our reporting period, we are having some raw material items. We didn't even touch those items. We just received those items from our suppliers. Okay. And if we take other end, at the end of the period, we do have some finished goods. We do have some finished goods, completed units. Okay. And also at the reporting date, at the ending date, where we consider the manufacturing process is still going on. Manufacturing process is still going on. Therefore, we do find some unfinished products, or else you may say semi-finished goods. Semi-finished goods. Let's say our time period ends on 31st December. So as at 31st December 2022, we do have some semi-finished goods. Semi-finished goods. They are not yet finished. Therefore, we cannot say as finished goods. And also, they are not raw material because we have processed up to some extent. So they are known as, we don't say it's semi-finished good, but work in progress. Work in progress. Work is in progress. Still, it is progressing, not yet completed. Right. So those are the major three inventory items that we can see. But other than that, we are having some other supporting. Sometimes we say utility stocks are there, which means let's say sandpapers in a furniture manufacturing firm. Timber is the raw material stock, and also we are purchasing some Sandpaper stock is there. It becomes a utility, right? It's not the main raw material item, but other raw material items, which comes under the indirect materials, right? The stocks of nails that we have, we do not consider them as raw materials, but we are not mainly focusing on that part here. In your syllabus, in your level, we consider only about those three: raw material stocks, work in progress stock, work in progress, and the finished good stock. Those are the major three. So raw material, these are the stocks which have not yet been used in the manufacturing process. We have not yet used those items. It's still there in the warehouse as it is. Then work in progress. These are the stocks which have already been in the manufacturing process but not yet fully completed. So they are not yet fully completed. Still they are in the warehouse as raw materials. Sorry, not yet finished, not yet finished, which means it's not finished goods, and it's not even raw materials because somewhat processed. Right. So when it comes to work in progress, right? So first let's discuss about raw materials. So raw materials, we are having a separate place in the manufacturing cost statement, right? A separate place is there to record it. At the top, we are starting manufacturing cost statement with the raw materials. We are starting our manufacturing cost statement from raw materials. But when it comes to work in progress, we do not have a specific place to record. We'll discuss about the format later on. But work in progress, we do not have a specific place to record. Why is that? For all the other items, we are having a specific place to record. But for this, it's not the case. It is because the place where we are recording the work in progress is depending upon, right, the level of completion of the WIP. As an example, let's say at the reporting date, 31st December, this WIP, work in progress stock, right? This work in progress stock is not largely processed. It was not thoroughly processed. Still, it's like raw material, but minor modifications as done. As an example, in the garment manufacturing organization, that firm, that factory, fabrics are there. Now they have cut the that pattern or design, right, of the item. If it is a shirt, you need to cut it, right? That proper design and all. That's the only thing that they have done to the fabric items or the raw clothes. So now you cannot say they are raw material, because raw material means it should be fresh. If it is to be raw material, it should be fresh, right? No any modification. But now we did a modification, which means we now have the cut of the particular garment item. So that's what we did as a 31st December. That's the only thing that we did. So it termed as work in progress, but we didn't do major modifications. But think about other process that we need to do. We need to fix the buttons. We need to fix the collars, right? We need to have the patterns and designs of the shirts, right? If it is a check shirt, or if it is a plain shirt, if it is a fabricated design shirt. So larger steps are there to be done further. Right now we did only a minor modification. Right? So in such situations, we have to record work in progress under prime cost, because still we incur only like prime cost. Raw materials are there. Okay, now we just cut it. That's it. Other larger overheads are not yet involved into that process. Therefore, If it is in the early stages of, if the work in progress is still in the early stages of hair production process, then we need to record it under the prime cost. Under the prime cost. Right. So it's very rational, right? Reason why you are doing this is very rational. Then, on the other hand, there may be some cases. There may be some cases where you are now in the latter part of your process, still not yet finished, but you are now in the latter part. As an example, as at the reporting date, the only thing that you need to do for this product is only the packaging part. But in order to become a complete unit, complete shirt, you have to pack it. Then only you can say it's the output. But everything has been done, but only the packaging has to be done. So like that. If the product is in the latter part of their process, then you need to record work in progress, not in prime cost, because now we incurred prime cost as well as other overheads, large overheads. They are also now incurred, right? Therefore, you need to record your work in progress now under factory cost, which means under production overheads, right? So if the work in progress is valued as a factory cost, then adjustment should be made at the end of the factory overheads. Please get this point. When we are doing a question, we can work on, but right now you need to have this understanding. Okay. Then other type of stock that we have is a finished good. Finished good. Completed units. Completed units. So finished goods, please keep in your mind, we are not going to record finished goods in manufacturing cost statement. We are recording this in the income statement. Income statement. So in the income statement, the top part, sometimes we refer to it as the trading account. So in the income statement, that in the top part, you need to record those finished goods. In income statement, when you're preparing income statement, you are saying opening stock minus closing stock. It means the finished goods. They are the finished goods, not the raw materials or work in progress. Right? Therefore, raw materials you need to record in manufacturing cost statement at the top. Work in progress, depending on the level of completion, right? Depending on the level of completion, you can record it work in progress under prime cost or either under overheads, production overheads. Finished goods, we are not recording them in manufacturing cost statement, but in income statement, as you all know. So this is the classification of inventory items that we find out in a manufacturing business. But if you say a merchandising business, you don't find raw materials, you don't find work in progress. Only thing that you are having is the finished goods that you have purchased from an outsider, from your outside suppliers. That's it. But in here, you are having other types of stocks as well. Anything to be clarified on this? Anything? Right. Okay. Then sometimes when we are in the process, now we are going to discuss about questions based on the manufacturing cost statement. So before that, we are now in the process of discussing those steps, right? Okay. So before we are moving towards those areas, shall we try on a question first? I think it's better. Sometimes you are now in a lethargic mode, right? After school and all, right? So we'll do a question. right? So this question will become an eye opener for you for your cost classification as well. So what you need to do is state whether the following costs incurred in the manufacturing operations would be direct or indirect and state their category. First, you need to say whether it is a direct cost, which means a prime cost, or indirect cost, which means overhead cost. Then you need to specifically mention whether it is a direct material, direct labor, direct other, or production overhead or non-production overhead. Clear? If you want, you can straight away write direct material, direct labor, direct other, production overhead, or non-production overhead. Because we know that direct material, direct labor, direct other means prime cost or direct cost. Production overheads, non-production overheads are indirect cost. Right. So I'll give you like 2 minutes for you, right? 2 minutes. Quickly attempt on this. Right. There are 10 items. If it is a direct material, you say DM, direct labor DL, direct other DO, production overhead POH, non-production overhead NPOH, likewise. Quickly write whether it is a prime cost or overheads. So first one, it says about state whether the following costs incurred in manufacturing operations would be direct or indirect and state their category. Okay. First one, production line workers' wages paid on the basis of output. Production line workers wages. Line workers means what? What do you mean by line workers? Line workers means the uh, workers, those who are working in the main task of the business, right? Main task of the operations. So they are the operational workers. They are the operational workers. So it comes as what? Operational workers' salaries. It comes as direct labor. It comes as direct labor, which means prime cost. Prime cost. Salary of the cost accountant. Cost accountant of the company, right? Cost accountant in the company. First of all, you need to think whether he in the factory. Cost accountant, is he there in the factory? No, he's not. Right? He's not there in the factory, not within the factory. Therefore, it comes under non-production overhead. Non-production overheads, which means indirect cost. Indirect cost. Right? Cost accountant, he's doing accounting part, he's not involved in the production, which means he's not in the factory basically. As I said, in order to become a production cost, that cost should be incurred within the factory. Within the factory. But cost accountant is not there within the factory. Next on office rent and rate. Office rent and rate. Again, it's incurred in the office, not in the factory. Therefore, non-production overheads. Non-production overheads, which means indirect cost. Machinery depreciation. Machinery depreciation on straight line method. So machines we are usually use for the production process. Therefore, it is a production overhead. We are incurring with that cost within the factory. Production overhead. Even though it is a production overhead, it comes as indirect cost. Indirect cost. Transportation cost of raw materials purchased. New item. So we say that we know that raw materials, right? Raw material cost. It is direct material cost. Direct material. So sometimes we need to incur some transportation cost in order to bring those raw material items from our suppliers' premises to our own premises. Right? We need to incur some cost for that. Transportation cost. So if there's any transportation cost like that, you need to add that cost to the direct materials. Therefore, this consider as a direct material cost, which means prime cost. Because if raw materials are there as it is in a particular place, no any use of that. We need to bring those materials to our own premises in order to do the production process. In order to do the production, we need to bring those materials to our own premises. Therefore, transportation cost of raw materials we added into that material cost. Then electric power to operate the factory machines, factory electricity bill, simply. So we incurred within the factory, therefore production overhead, which means indirect cost. Overheads anyway indirect. Insurance incurred on factory machine. For factory machines, insurance. So insurance cost is there, but for factory machines, therefore again, production overheads and it is an indirect cost. Wages for factory cleaners. We discussed this part. Factory cleaners' salaries and wages. Factory cleaners, they are within the factory, within the premises. Therefore, production overheads, which means indirect cost. Then leather used for shoe manufacturing. Leather used for shoe manufacturing. If you are doing the shoe manufacturing part, shoe manufacturing process, leather is the main item. That leather is the main item, main raw material item for manufacturing. Therefore, direct material, which means prime cost. Wages of press operators in a printing establishment. So in a printing establishment, printing company, the salaries that you are paying for the press operators. Right? Press operators means the machine operators. So they are the ones, they are the major ones, those who are carrying out this production process. Therefore, consider as direct labor, which is in the prime cost. Right. Are you all okay with this? Anything to be clarified? Got any answer? Oh, got it. If there's anything to be clarified, please let me know. Right. So let's go back to the discussion. Right. So common expense apportionment. Common expense apportionment. So what do you mean by this common expense apportionment? Which means there are some costs where we are incurring it as a whole for the whole business. So if you say business, sometimes in a production organization, they are having the same building, right? They're having the same building. In the building, right? One part is the factory, other part is the office. One part is factory, other part is office. So if they're having only one electricity meter, they are getting one electricity bill. If they are in a rented out building, right, then they are paying one particular rent for the whole building. Likewise, there are some commonly bearing cost for factory as well as for the office premises. But when we prepare manufacturing cost statement, when it comes to manufacturing cost statement, definitely we need to consider about the cost that we incur within the factory. Only within the factory. Therefore, we need to ignore or we need to remove the cost relevant to the office or selling part or distribution cost or whatever it is. Other things we need to remove and we need to take only the cost related to the factory. Right. So in your examination, in your paper, sometimes they will give this type of classification, right? Apportionment. So based on the given details, you need to break the cost. So this is the factory cost and this is the office cost. So there are some expenses which are not traceable from which function they arose. As an example, fuel expense is a cost which can arise as either factory expense, admin expense, selling and distribution expense, or other expense. Let's say we are bringing fuel together for the organization. One part we are using for machines, one part for administration expenses, let's say for the generator. Then selling and distribution expenses for vehicles, distribution vehicles, we are using fuel again. Likewise, for different functions, we are incurring cost, but we incurred that cost only once. So in such a situation, it is difficult to trace what amount to charge to the manufacturing account. In such cases, we apportion the total of the shared cost to individual departments such as production, sales, using a reasonable basis. So in your case, in your examination, based on the given details, you need to apportion this cost on the based on the given details, right? As an example, they may say, out of the total fuel cost, 40% to sales department, 50% to production department, and 10% to administration department. Likewise, therefore, as an example, let's say in here, total fuel cost is 100,000 rupees. So sales department, 40,000. It goes to income statement, sales and distribution cost. 50% to production department, which means 50,000. This goes to manufacturing cost statement as a production overhead. Production overhead. Remaining 10,000 administrative expense. Therefore, it goes to admin expenses. Right? Likewise, if the total cost is given, you need to separate the cost which is related to the production part, production department. Because as I already said, manufacturing cost statements we are preparing only for the production part. Therefore, we are considering cost that we incur within the factory. Right. So here you can see the format of manufacturing cost statement. Right. So first of all, as you all know, in the usual way, you need to mention the name of the company, like ABC company. Then you need to say what you are going to prepare, right? Manufacturing cost statement. Sometimes I'll tell that later. You can keep the same manufacturing account as your trading account in the income statement, right? We'll come to that point later on. And you need to mention the period, year ended 31st December 2022, right? So usually we are preparing manufacturing cost statements for a specific time period. Therefore, you need to mention for the year ended, for the quarter ended, for the month ended likewise. Okay. So if we take first part of the manufacturing cost statement, you can see we are starting with raw materials. Which means we are starting with prime cost basically. So production cost or manufacturing cost, there are two parts, prime cost and production overheads. So we are starting with the production overheads. So we are starting with the prime cost, right? Production cost, two parts, prime cost and production overhead. We are starting with the prime cost. So on the prime cost, we are having direct material, direct labor, direct other. So we are starting with the top item, which is the raw materials or direct materials. Right? Therefore, first topic is the raw materials. Right. So if you are having any opening raw material stock, which is coming from the previous time period, you are consuming that part first. Ultimately, what we need to find out? We need to find out the cost of raw materials consumed. This part. So if there's any opening stock which is coming from the previous time period, we are using that stock first. Therefore, first element should be opening raw material stock. Right. Then we know that stock is not sufficient. Therefore, we need to purchase. Some items. So then you need to add this purchase cost separately. Then, as I said, sometimes mere purchasing does not add any value for us. We need to consider about some carriage inwards, import duty, custom duty, where we need to incur those costs. Sometimes carriage cost like carriage inwards, the bringing down cost, we say, right? Carriage inwards means the transportation cost that we have to incur in order to bring those raw materials to our own premises from our suppliers' premises. Right? So carriage inwards, import tax, custom duty, we need to incur those costs in order to convert the raw materials into a usable condition. So for the purchase of raw materials, we need to add all those items. That's why I said that transport cost, simply the carriage inwards, right, becomes a part of raw material cost or direct material cost. Right. So we are having opening raw material stock, we can consume that. Then we are purchasing, and along with we need to incur some other cost to bring the materials. If you are importing raw materials, we need to pay custom duty. right? We need to pay custom duty in order to clear those items. And sometimes we need to pay import taxes for from our suppliers in the harbor or airport. Sometimes you need to pay import taxes if you are importing those goods, right? Importing tax. Likewise, some essential cost items to be there. Those things you need to add to the raw material cost. Then we say it as the, right? So this opening stock is there, total cost of purchases. The answer you refer to as the cost of materials to be consumed. Cost of materials to be consumed. To be consumed. You can consume that. But what is happening? You are not consuming all. Some stock will be there remaining in your warehouse without being consumed. Therefore, you need to deduct that closing stock. You are not consuming it. It's still there. Those raw materials are still there in your warehouse without being consumed. Therefore, you need to deduct that closing stock from the cost of raw materials to be consumed. Then you can have the answer cost of raw materials consumed. Cost of raw materials consumed, right? So this is your direct material cost. This is your direct material cost. Cost of raw materials consumed. Direct material cost. So sorry. So you cannot find this cost directly, right? You cannot find it out directly. What you need to do is you need to do some calculations for that. Right? You need to do some calculations for that. Okay. So this is how you calculate the direct material cost. This is the biggest part. But other things are not that difficult. Other things are not that difficult. As an example, next part, direct labor. Direct labor. So direct labor, you can take as it is. Right? You can take it as it is. So we can take direct labor cost as it is manufacturing or the production workers' salary. Then other direct expenses like royalties, if they are there, you can directly take them. No any other adjustments to be done. So here direct materials are there. Here direct labor. Here direct other expenses. The total of them we can consider as prime cost. Total we can consider it as prime cost. But as I said previously, if work in progress is there, WIP is there, and they are still in the initial level, but still it is in the initial level, not yet gone that much in the line of production, then we need to adjust it in the prime cost. So you can see up to this point, we are considering about the prime cost. Direct material is there at the top, direct labor, direct other. If this part is not there, we can consider it as prime cost. But if work in progress is there at the initial stage, initial level, then you need to do that adjustment here. So how to do the adjustment for work in progress? So work in progress means, as I said, semi-finished goods, semi-finished goods. Some semi-finished goods or work in progress is coming from previous time period to our time period, from last year to our year, right? So we are completing those units during our time period. Right? So semi-finished goods of last year, we are completing them in this year, our current year. Current year. Therefore, the opening work in progress, opening WIP cost, we need to add to our manufacturing cost because we are completing them in our time period. In our time period. On the other hand, at the end of our time period, let's say as at 13th December 2022, right? There are some work in progress, semi-finished goods, not yet finished. We are going to finish them in next year. Therefore, what we do is we remove that. That's why we say less closing work in progress, because we fully ignore that cost and we transfer it to next year. Right? We transfer it to next year, upcoming year. So this is the work in progress adjustment, WIP adjustment. If there's any opening work in progress, which is coming from the last year, we need to add that to our cost because we are completing that in our time period. But closing work in progress, which is there at the end of our time period, but we are not going to complete that within our time period, but we are completing it in the next year. So we need to remove that cost. That's how we are doing the adjustment. So that's about the prime cost. Okay. Then factory overheads or production overheads. You can say factory overheads or else production overheads. So there's no any proper order. You can write whatever the items as it is. Rent and rates of factory, insurance of machineries, in factory electricity, factory water, machine depreciation, indirect material, indirect labor, other indirect factory. Likewise, anything that you have other than the prime cost, but you are incurring within the factory, right? There are some costs where you are incurring within the factory, but not the prime cost, not the prime cost. Those things you need to mention under the factory overheads, factory overheads. Right? Then the total overhead cost is there. Right. So WIP, if the WIP is at the latter stage, work in progress is at the latter stage, you need to adjust them here, adjust them here. Don't think that it is we need to record them in both the places, then it will lead to a double counting error. Depending on the question, in your question, sometimes they may say adjust your work in progress under prime cost, then do so. Sometimes it may be silent. They may not say anything. They may just say work in progress is this much, opening is this much, closing is this much. That's it. In such a situation, which means the default situation, you need to record them in under overheads. You have to record them in overheads. Right? Okay. Then we can have the total manufacturing cost. Total manufacturing cost. Right. So actually, this is the ending point of manufacturing cost statement. But you need to know about the next step of this. Right? Next step of this. What is the next step? We need to transfer the manufacturing cost to our income statement because this is not a final statement. We do not represent this manufacturing cost statement in our annual report. Right? We don't do that. We take this manufacturing cost to our income statement, basically the trading account, right? Trading account, and we do the adjustment there. So here, from this point onwards, you can see the income statement, the top part, which is the trading account, right? Usually we prepare manufacturing cost statement only up to this level, right? Only up to this level, right? So here we can see income statement. So we are having sales. If there's any sales return, you need to deduct it. Then if there's any opening stock of finished goods, as I said, finished goods, they go to the income statement. And here we directly add total manufacturing cost. Cost what you take here, you need to transfer it to here. Calculated manufacturing cost, you need to transfer to here. Then if there's any stock of finished goods, closing stock, deduct it. You refer it as cost of sales. So you can deduct your cost of sales from your sales, then the gross profit. Right. So what is the learning point here? So this part I think we already know when you discuss about the financial statements of a single owner business or sole proprietorship business. Right. What you need to know here, the learning point is this total manufacturing cost should be transferred to the trading account or to income statement, where you need to take the opening finished good stock. For that, you need to add the manufacturing cost and then you deduct the remaining finished goods. So that's how you do the adjustment in your income statement. All right. So it says if work in progress is valued at prime cost, then you need to do so. And if you want to adjust work in progress in your full production cost, you can do it so based on the level of completion. Right. So that's the end of theoretical part of manufacturing cost statement. So I'm not going to discuss those theory questions. You can easily answer them by referring to the information given in this handout. So we'll do a quick calculation, right? Question number 4. I hope you all are having the handout. So let's work on question number 4 and 5, right? 2 calculations. Then we can easily understand what we have already discussed, right? So the following balances were extracted from Wilson Traders for the year ended 31st December 2022. Right? So different figures are there. What we need to do is we need to prepare manufacturing cost statement. Okay. So I'll do this in a Excel sheet since it is easy for me in order to represent. If not, it will take time as well. So you can work it out in a paper, right? Because you don't have the luxury to use the Excel sheets in your examination. It's very easy actually, but unfortunately you cannot use it. You need to have the hands-on experience. Therefore, take a piece of paper and we'll work on the paper, right? Anyway, I'll be explaining you step by step. First, what you need to do, right, so, right. So question says that the following balances were extracted from Wilson Traders for the year ended 31st December 2022. Right. So write the name of the company at the top. Wilson Traders. Wilson Traders. Then you need to say manufacturing cost statement, what we are going to prepare. Then the time period. So time period means for the year ended 31st December 2022. 31st December 2022. So it's better to have like the 3-column statement, right? To put the values, you can have 2 columns, and for the description, 1 column. Right. Okay. Then you have to have the format, but you are not in the format, you are not going to write everything, right? So those are the things you need to record, right? Let's say raw materials as the topic. Then keep few lines space, because we know that on the raw materials you need to do several adjustments. So keep few lines space. Then take direct labor. If there's any direct other, put 1 line space, right? 1 line space. and see whether prime cost is there. Sorry, work in progress is there. So we don't find any work in progress here. Is there any? Yes, it is there. Work in progress. Work in progress is there. Now see whether they have mentioned as a separate place to record work in progress. No, there's nothing like that. They didn't mention the place to record work in progress. Therefore, the default option is we are not going to record them under prime cost. We take it to overheads. Therefore, now we can take prime cost. Then other one is production overheads. Production overheads. Right. So again, for production overheads, you can keep few lines space. Work in progress. After writing all the items, I can take work in progress. So what I do, say plus opening WYP minus closing work in progress. Then I can take total production cost. Total production cost. So this is the format that you need to have. So I'll highlight them since for you to see, identify them. Other things we are filling by looking at the details given in the question, right? In the question, we are not going to write everything. Quickly have this format. Right. So we'll move on to the question quickly. Okay. First one, it says raw material stock as at 1st Jan 2022, which means opening raw material stock. Opening raw material stock. It is 37,000. 37,000. So raw materials, I would say opening stock. Sorry, opening stock 37,000. Raw materials opening stock 37,000. Then raw material purchases 678,000. So opening stock is not sufficient. Therefore, we need to add, or we need to purchase some items. Add purchases 678,000. Purchases. Purchase of raw materials. Then carriage inwards. So for this, we need to add carriage inwards from a purchase. Let's say purchase raw material purchases. Purchase is not sufficient. We need to add carriage inwards. Carriage inwards means the transportation cost that we have to bear in order to take those raw materials items into our warehouse or into our premises. So we need to add carriage inwards. 17 thousand. 17,000. Right. Then raw material stock as at 31st December 2022, which means closing raw materials 42,000. So from this, we need to deduct closing raw material stock 42,000. So it is a deduction, therefore minus 42,000. So here we can say something. What is this? Opening work, opening stock, raw material purchases plus carriage inwards minus closing stock. Even before this. Before this, what you can say? Opening stock is there. We purchase this much and we add something from carriage inwards, right? So we refer to this as cost of raw materials to be consumed. We are having the ability to consume those items. That is the meaning. We can consume all of this, right? So if we take the total here, 732,000. Right, 732,000. Then you need to deduct the closing stock. So even though you are having the chance to consume this much, there's a closing stock remaining. Therefore, in here you need to say cost of raw materials actually consumed. Cost of raw materials consumed. So 732,000 was there. Out of that, we deduct 42,000. Therefore, cost of raw materials consumed is 690,000. Better if you can take this to other column. Right. Material cost. Right. Yes. Shania. Yes. Take your time.
Thank you, sir.
Guys, this is to once again remind you that that we have a paper model book that is also going along with this project. So basically, this book contains 6 model papers for accounting, economic, and business studies, along with the answer scripts. This book is available in both Sinhala and English mediums, and also the funds raised through this project will be directed towards Project Sisuvara, which is a community service project in which a rural underprivileged school will be chosen and their necessities will be fulfilled. So if you can, please contribute towards this worthy cause. Once again, it's a model paper book that contains 6 model papers for accounting, economics, and business studies. Thank you, sir. Just a minute. The link for that model paper book will be shared in the chat. Thank you, sir.
Okay.
Thank you, sir. Over to you.
Right. Okay. Okay. Right. So this is the raw material cost for the period, right? Opening raw material stock was there. Then we purchase raw materials. For that we have incurred carriage inwards. Then we got the answer as cost of raw materials to be consumed. And out of that we left us left with some stock, which is known as closing stock. And finally we found out the cost of raw materials actually consumed. Okay. Then wages for direct labor 160,000. Direct labor you can take 160,000. As I said, directly giving 160,000. Direct other expenses 27,000. 27,000 direct other. So we'll take all the items and finally we do the balancing part. Electricity expense of the factory. Factory electricity expense 39,000. So factory electricity means production overhead. So factory electricity, it is 39,000. Then factory rent and rates. Factory rent and rates value is 18,000 under production overheads, since it is there in the factory, but we do not take under prime cost because it's not directly traceable with the product. Then factory insurance 40,000. Factory insurance 40,000. Then wages paid to cleaners 55,000. Production overheads 55,000. Machine depreciation 23,000. Machine depreciation 23,000. Then work in progress, right? Opening work in progress. So here they didn't mention anything about where to put the work in progress. Therefore, as I said, the best practice is to record them under uh, overheads, assuming that they are like at the latter part of their process. So you can add work in progress, opening work in progress. Value is 18,000. And you can deduct closing work in progress, which is 21,000 minus 21,000. Anyway, it's there. I have taken. Right. So this is the manufacturing cost statement that we can have. Now we need to finalize it. So here we finalize one part, cost of raw materials consumed, which means direct labor cost. Here you can take the direct labor and direct other cost, right? 160,000 plus 27,000, which means 187,000. Therefore, prime cost is direct material plus direct labor and direct other, means 877,000. So you can even use the calculator and you can quickly take the answers. Prime cost is 877,000. Production overheads, the total of those figures, right? 39,000, 18,000, 40,000, 55,000, and 23,000. Sorry. $175,000. Work in progress, net impact minus 3,000. 18,000 plus 21,000 minus. Now you can have what? Total production cost. Total production. I'll take it here. Total production cost. So total production cost means prime cost plus overheads plus work in progress, which means 1,049,000. So this is our manufacturing cost statement. So is there anything to be clarified here? So this is a very direct question. No more adjustments, right? Simply we need to put whatever the items given. So if there's anything to be corrected, please correct them before we are moving to the other question. Are you done with this? Anyone doing this? Still doing this? Right. Okay. So let's go for question number 5. I think there are more items there, right? First requirement is same. We need to prepare manufacturing cost statement, right, with the given details. So I can use the same format, but you have to redo this. But don't write those items, only the highlighted cells, right? Those things we need to fill out when we are reading the trial balance, right? By taking the items from trial balance, we are filling these items, right? So only the highlighted ones. Name of the business is it's not given, garment manufacturing company, right? It's okay. Manufacturing cost statement for the year ended 31st December 2022. Quickly draw the same format. Okay. Raw material stock as at first 42,500. So opening raw material stock 42,500. Raw material purchases 285,000. Carriage inwards 12,000. Carriage inwards 12,000. Closing raw material stock, which means 31st December raw material 67,000. So it should be minus 67,000. Wages for sewing machine operators. So they are the direct labor. Now they don't say the term direct labor as it is. Sewing machine operator salary means the direct labor 273,000. Direct other expenses 93,000. 93,000. Electricity expense of the factory 36,000. Right, factory electricity 36,000. Factory rent and rates 54,000. Factory insurance 105,000. Wages paid to cleaners 75,000. Machine depreciation 37,000. Work in progress opening 63,000. Closing work in progress, it is 57,000. Factory administration expenses 25,000. So another overhead cost, factory administration. So factory administration. So you can write it anywhere, right? Anywhere, instance under production overheads, no order. On production overheads, you can write it anywhere. Factory administration. $25,000. Salary of the factory manager 23,500. That's it. So now we can balance this. Cost of raw materials to be consumed. Opening stock 42,000 plus. Raw material purchase plus carriage invoice 339,500. From that cost of raw material, we need to deduct the closing stock. So 272,500. cost of raw materials consumed, or else you can say direct material cost is 272,500. Direct labor 273,000 plus direct other 93,000, which means 366,000. Direct material cost is 272,500 plus direct labor and direct other 366,000. So prime cost is 638,500. Production overheads, the total of 36,000, 54,000, 105,000, 75,000, 25,000, 23,500, 37,000 means 355,500. Work in progress. Closing value should be a minus. Opening work in progress 63,000 minus closing work in progress, which means since the opening work in progress is higher, it comes as a positive figure of 6,000. Finally, total production cost. Prime cost 638,500. Overheads 355,500. Work in progress 6,000. So it comes as 1 million. Total production cost is 1 million. So after preparing manufacturing cost statement, there are a few other requirements. If the garments produced amounted to 1,250 units, what would be the cost of a garment, right? So this is the total production cost or total manufacturing cost. Total manufacturing cost. Now we need cost of 1 unit. Cost of 1 unit. So how to do that? How to take it? Total production cost divided by number of units. Total production at the manufacturing cost. Total production cost divided by number of units. So total production cost is 1 million divided by number of units produced 1,250. 1,250. 1 million divided by 1,250 means cost per unit is 800 rupees. 800 rupees, the cost of 1 unit. final one is the selling price of a price of a garment is cost plus 25% on cost. Calculate the gross profit, right? Actually, it should be the selling price. You need to calculate the selling price of a garment item, not the gross profit, right? It's a mistake. Calculate the selling price of a garment item. Selling price of a garment item. Right. So now we decided on the cost. So let's say cost of a unit is 800. Now we are adding a profit for that. How are we adding? From the cost, we are expecting a profit of 25%, which means 0.25. Therefore, profit is 200 rupees per unit. 200 rupees per unit. Now we can say selling price is cost plus the profit. Selling price is 1000 rupees per unit. Change the requirement in the question. You need to find out the selling price for one garment item. Right. So anything. So with that, we are done with the manufacturing cost statement. Then we need to move for in case to inventory. But before that, is there anything to be clarified on this? Okay. Okay. So next part is inventory, a separate accounting standard we are having, which is LKS 2. LKS 2. So this part somewhat related to the manufacturing cost statement as well. So as you can see, we are dealing with the inventories or the stocks. So in manufacturing cost statement also we discuss about the inventories. So if you define inventories, there can be held for sale in the ordinary course of business. Right, inventory items we are having, they are to sell in the ordinary course of business. That is known as the finished goods, right? Finished goods. Then in the process of production for such sale, which means work in progress. In the process of production, still in the process of production, work in progress, or in the form of materials or supplies to be consumed in the production process, which means the raw materials. So same thing that we discussed previously. If we say inventory, either it can be finished goods, either it can be work in progress, or it can be raw materials. Raw materials. Three types of inventory items. Then the components of the cost of inventory. Components of the cost of inventory. So if we say inventory, as we all know, right, purchase cost comprises with a large amount. Purchase cost comprises with a larger amount. The amount that you are paying for your suppliers to purchase those items. Purchase cost. Right. But purchase cost is not the only cost of inventory. It's not the pure cost. That's not the only cost. Because there are some other cost items as well. There are some other cost items as well. As an example, let's say, if you want to know about the cost of your finished goods comes from the production process, as we discussed. It comes from the production process. So purchase of raw materials, as we discussed previously, raw material purchase part, raw material cost is one element. Then you need to convert raw materials into finished goods. That's what we discussed. You need to convert raw materials into finished goods. So what are the cost items that you incur in order to convert raw materials into finished goods? Which means you need to incur direct labor, direct other, as well as production overheads. Right? So this is the intermediary process. Right? Intermediary process of converting raw materials into finished goods. So for that you need to incur direct labor, direct other, and production overheads. So please keep in your mind, conversion cost means the addition of direct labor, direct other, and production overhead. This is an area where repeatedly testing, but students are failed to recognize the meaning of conversion cost. Conversion means the cost involved in converting raw materials into finished goods. So into finished goods. So it does not include raw material cost. In other words, you can say production cost minus raw material cost. Production cost minus raw material cost. Right? So production cost means raw materials, direct labor, direct other, production overheads. So if you deduct raw material cost from the production cost, then you can say it as the conversion cost. Conversion cost. Right. So if you say inventory, either it can be purchase cost, then purchase cost plus sometimes conversion cost if you are involved in the production process, conversion part. Then some other cost, as we saw, the carriage inwards. Right? Carriage inwards. Incurred in bringing the inventories to their present location and condition, which means the cost that we need to incur, right? Cost that we need to incur in order to bring those items, right? Either it can be raw materials or it can be finished goods. The cost that we incur in order to bring those items to our premises, our location, that part also becomes a cost of inventory. We consider it as a cost of inventory. Right. Then, so this is a standard. So all those things are there in the standard, but in the standard, they say it in a very complex way. Here, I'm trying to summarize it and to give you a simple picture in your mind, to create a simple picture in your mind, right? But because if you refer to standard, then it's a bit difficult to understand the wordings there. Not that easy to understand. Right. Then it says the excluded cost from the inventory valuation. When we are valuing the inventory, when we are taking the value of inventory, we exclude some items. We do not consider some items. What are those? As you already know, selling cost, right? General administrative cost, administrative overheads, right? Overhead selling cost, general administrative cost, the storage cost, right? Right? The storage cost, warehouse cost, it does not come under inventory valuation, right? Only purchase cost, conversion cost, and other costs to bring the items into our premises. Storage cost, it does not coming under the inventory valuation. And also, most importantly, abnormal amounts of wasted materials, right? So if we discuss about a little bit regarding those wastages, right? Wastages. There are two types of wastages as, or sometimes we say this as loss. Normal loss or normal wastages and abnormal wastages or abnormal loss. Normal loss and abnormal loss. Normal and abnormal. So no need to have like a thorough understanding on this, but a simple understanding. Normal loss means something, some losses, some wastages are there, definitely you need to incur. Without incurring that loss, you cannot do the production. As an example, if we say, when you are doing the garment manufacturing, right? Let's say this is the piece of fabric that we have, right? Raw materials. So if you are sewing a shirt, first you need to cut the design, the pattern. Then definitely those items are considered as the wastages. So we say those as cut pieces. Sometimes you may have heard this term, cut pieces. They are selling it separately sometimes, right? So we cannot do the production without incurring this loss. In order to have a shirt, this part definitely will be a loss. So normal loss doesn't matter. We consider it under our inventory valuation cost as a cost of inventory. We consider it as a cost of inventory. But abnormal losses, as an example, let's say due to a machine breakdown, right? Machine breakdown, it destroyed several tons of raw materials. So it's not a normal loss. We say it as an abnormal loss, abnormal wastage. If there's any abnormal wastage, you cannot consider it under the production cost. So this goes to other cost in income statement. It goes to other cost in the income statement, right? So if it is a normal loss, doesn't matter. You can consider it under your product cost or inventory valuation. But if it is abnormal wastage, you cannot take it under inventory cost. Under inventory cost. Right. So this part, theory areas, but in most of the cases, your examiner is testing those areas. Right. Then, when we are valuing inventory, there are a few concepts that you need to know. And you have to familiarize with. Let's say you are having the cost of items that you purchase. Let's say finished goods, right? Finished goods. So you are having the cost of those output that you have purchased from the suppliers. Let's say 1,000 rupees per unit. What is your expectation? Which means, what is your expected selling price? Definitely, it should be a price which is higher than 1,000. If you sell this at a price less than 1000, it creates a loss for you. Definitely, it will create a loss. Therefore, your expected selling price should be higher than 1000 rupees. Higher than 1000 rupees. It may be 1200, 1300, 1500, whatever it is. Right? So, always we need to do this assessment. Always we need to do this assessment at the end of the period. Okay, we know the cost, which means the amount that we paid for our suppliers, and you need to compare this with not only the expected selling price, we termed it as net realizable value. Net realizable value. What do you mean by this? Net realizable value. This is the ultimate value. So this is the ultimate value where it remains in your hand. Ultimate amount that remains in your hand from this value, from this stock. Right? So how to calculate net realizable value? NRV. NRV is the estimated or expected selling price, minus if there's any estimated cost of completion plus any estimated selling expenses. Right. Let's say in this way, cost is there 1000. Okay, you purchase those items at 1000 rupees. Your expected selling price is 1200. Looks good. Okay. You are selling at a price which is higher than your cost. That's okay, that's good. But in order to sell this unit, sell 1 unit of this particular product at 1200 rupees, you have to do further process, further completion, which means you need to add some value, further value to this, further modifications simply. You need to do some further modifications to this. So let's say for that, let's say cost of completion, you have to incur another 100 rupees. In order to sell this stock at 1000 rupees, you need to do some further additions or modifications to this. So it costs 100 rupees. 100 rupees. And also, sometimes you have to bear some selling expenses, which means you need to put an advertisement in the newspaper or TV commercial, or you need to find a broker to sell those items, especially when it comes to motor vehicles and houses. There are brokers. So there are some selling cost as well. So for selling cost, you need to incur another 200. So NRV is not just the expected selling price. From the expected selling price, you need to deduct cost of completion as well as expected cost of completion and expected selling cost. Therefore, it ended as NRV is 900 rupees. 900 rupees. So when you value your inventory at the end of the time period, you need to compare your cost with NRV. So in this case, NRV is 900. So this is not a good situation, right? This is not a good situation because you are ended up with the amount which is less than your cost. It creates a loss for you. Definitely, it creates a loss for you. So in the standard, it says that in the statement of financial position under current asset, first item should be your inventory. Inventory, either it may be finished goods, it may be raw materials, or it may be work in progress, whatever it is. When you value this, right, especially finished goods, when you value it, right, this is not applicable for raw materials and work in progress. For finished goods, always compare your cost and NRV. Compare your cost and NRV, net realizable value. Then record whichever is lower. Whichever is lower. So here cost is 1000, NRV is 900. Therefore, your finished good value in the statement of financial position should be 900, the lower amount. Lower amount. So this is the rule of thumb. Take the cost, then calculate the NRV. NRV means net realizable value. How to calculate? Estimated selling price minus estimated cost of completion and estimated selling expense. Then compare your cost with the NRV, net realizable value. Take lower amount. It goes to the current assets section in the statement of financial position. Financial position. Right. So there are a few methods to determine the net realizable value. Net realizable value. Sometimes you can do this item by item. Item by item. So for valuable items, you can do this. In order to calculate NRV, you can take one item as an example. Let's say in a car sale, you can do the NRV calculation for each and every unit separately. For each and every car, what is the expected selling price? Then do we need to do some further modifications to those cars, further processing cost, right? And what are the expected selling cost, selling expenses? Do we need to go for a broker, right? Are we going to do some advertisements? Likewise, you need to think about item by item. So take one item, do this, another item, do this, likewise. Then again, for jewelries, you can do this separately. Where high value items, diamonds, jewelry, you go for item by item, which means for each and every item, you do this in recalculation separately. But when it comes to some general items, let's say groceries that you have, if you are having a retail shop, for grocery items like rice, soap, sugar, milk powder, you are not going to do this one by one. If you are going to do this one by one, only thing that you can do throughout your time period is the NRV calculation. Let's say supermarket, you are going to do NRV calculation separately for each and every item, one by one, one by one, one by one. Then it takes time, it's not possible. Therefore, group basis. You take particular product, let's say soap category. Even soap, you can have few categories, then okay. Likewise, here you take a group of items together, similar items together, and do the NRV calculation. That is also possible. That is also possible. Right. Then those are actually few theory points. You need to do calculations on them because in your examination calculations will be tested, but we don't have time to discuss calculations. That's why I'm just going through those areas. Definitely you have to do calculations. Even this item by item basis, group basis, you need to do calculations, right? Then accepted the cost formula under LKS 2. So at the end of the time period, you need to know about the closing stock value. So in all your questions, you see closing stock value is this much, finished good closing stock this much. We saw that in the previous question. Finished goods this much, raw materials this much. Likewise, the closing stock value has been mentioned. So how to decide the value of closing stock? We are having two methods. As first in first out method, we say FIFO method, or else WAC method. So under FIFO method, we assume that first in first out, which means initially purchased items we are selling first, right? Which means there's a order where materials and items are coming into the business. So we are selling in that particular order. Once we receive it, we are selling. Initially purchased items, we are selling first. Then only we go for the latest purchase items. That is known as first in first out. In WAC method, there's nothing like that, right? When we issue materials or when we are selling goods, right? We do it in a general way. right, in a general way, and do calculations separately by considering all items as a one single unit. So two different methods to calculate the closing stock. Right. Then another point in this standard, we know that inventory, as I already mentioned, inventory is a current asset. Inventory is the current asset. But sometimes even inventory can be an expense, right? Which means sometimes we need to record some items in uh, income statement under expenses, right? When we are going to do this, there are two situations. One is at the time of selling the inventory. Yes, in the trading account, top of the income statement, at the top of the income statement, trading account, right? There you say you are having a separate part as cost of sales, or sometimes you may say cost of goods sold, COGS, cost of goods sold. So when you are selling your goods to your customers, then the value of the inventory becomes the cost of sales, right? What is the cost of the sold items? You already know about this. On the other hand, if there is a stock loss, right? When there's a stock loss, what do you mean by stock loss? As I mentioned previously, we need to consider about the cost of the stock as well as NRV at the end of the time period, remaining stocks in the warehouse, right? So if your NRV, as per the previous example, 900, cost is 1000. If your NRV is lesser than your cost, this difference we consider as a stock loss. Cost is 1000, NRV 900, which means we are selling 100 rupees less than what we have purchased. So here stock loss is 100. So the stock loss is recorded as an other expense in the income statement. What happens if it had occurred in other way around? Cost is 1000, NRV is 1300. It's good. There's no any loss. Therefore, nothing to do. If you are, which means if our NRV is lesser than the cost, then stock loss has been created. You need to record that as an expense in your income statement. So those points are really important, especially from question number 31 to 50 in your first paper, right? Fill in the blanks. They may ask those stuff. Right. Finally, the standard says that as disclosures at the end of your financial statement, financial reports, you need to mention them as notes. Right? As notes, you need to mention those stuff. What are the items? NRV determination method. Definitely you have to measure the NRV. So what is the method that you are using? Is it item by item basis or group basis? You need to mention that. Whether you are going to measure NRV separately, individual item by item, or as a group. And the cost formulas, as I said, whether it is first in, first out method or WAC method. Then whether there's any stock losses where NRV is lesser than the cost. Stock losses has been created. If there's any stock loss, separately mention it because stakeholders want to know about them. Then inventory is kept as securities. Sometimes, yes, for your bank loans and any other loans, sometimes you pledge it as securities. So if there's any such items that you kept as securities, then that part should be disclosed in your financial statements as separate notes. Right. So those are the areas where from LKS 2, they'll be testing in your examination, but you please keep in your mind, you need to do calculations on all those areas, right? They will be testing the calculations as well. Our time is almost over now. so we cannot do calculations. That's why I just go through the theory parts there. And we were able to complete the manufacturing cost statement. Right, so this is the part that I was actually planning to do, and now I'm done with the part that I'm going to do. So thank you very much being participate for this year. Shania, any closing remarks?
Yes, sir. So that was a very informative session, sir. I'm sure the students found it very useful and got their doubts clarified. The session was recorded and will be uploaded to our Rotaract Club's YouTube page as well. Thank you very much, sir. Thank you very much again. So hope you all will join tomorrow for the English Medium Business Studies session. So thank you guys for joining, and we'll meet you tomorrow. Thank you. Good night.
Thank you. Good night.